The following was recorded in front of a live studio audience at the Studio 21 Podcast Cafe. This is the United Podcast Network.
Welcome to Easy Money New England.
Oh, can somebody help us here?
We can, because we are real estate and mortgage professionals.
Where you go?
It says come in and browse.
That's right. Come on in, listen up and learn.
How long do you intend to browse?
In a short period of time, our panel will teach you some tricks that might make your house buying easier.
You didn't ask her how long she intends to browse.
You might not be looking for a mortgage today, but we'll get you ready.
You don't look like browsers.
Are you looking?
No, what do browsers look like?
Yeah, maybe I'm half browse.
On his father's side.
This is Easy Money New England
Let's show the lady we're browsers.
with your host, Brian Damico.
Hey, look at us, we're browsers. One more word out of you and he gets it, all right? Come on.
Hello, and welcome to another edition of Easy Money New England, where every week we bring you money-making opportunities or money-saving ideas all around the areas of real estate and finance. So this week on the show, we're going to talk about, if you're looking to buy a home in Massachusetts, we're going to be talking about a program specifically for Massachusetts, first-time buyers, and that's mass housing. So a lot of times you may hear about, oh, it's mass housing or it's a first-time home buyer program. Or, a lot of times, people just market it that way. That is, oh, it's a first-time home buyer program. But we're going to get a little bit more specific about what mass housing provides. And today on our show, we have MRice, the mortgage guy, and NMLS number 47902 from NewFed Mortgage. MLO number 47902.
Oh, okay.
And then NewFed Mortgage, NMLS number 1881. So without further ado, MRice, welcome back to our show. You've been on the show before.
Thank you very much for having me, Brian.
So the first time on the show, Mike, he was on for how to structure when you're going through a divorce in your mortgage. So you have a certification for divorce couples as you do, you're really trying to specialize in this mass housing program.
Exactly.
All right. So again, if you're looking to buy a home and you're looking in Massachusetts, this show's for you. So let's get right into the show about mass housing, right? So mass housing is a 30-year fixed rate mortgage?
Yes, 30-year fixed rate. You can go up to, typically speaking, 97% loan to value. So
3% down.
3% of your own funds, or it can be gifted.
Gifted from a relative?
Exactly.
Okay. Or an employer?
Yes, that's correct. It can be, as long as we have a letter of explanation in the file. It's a great program. People often compare it to FHA. The difference with the mass housing and the FHA really is the fact that mass housing has discounted mortgage insurance, where FHA, has a set number for the mortgage insurance. It's typically higher. Mass housing, you have to meet certain income qualifications, and it's different than most programs where we want to keep you under certain income guidelines, because it is, it's a program that is meant for people that fall, typically speaking, under 135% of the area median income.
So let's talk about that. So, a lot of times, when a loan officer kind of looks at your specific scenario, they're trying to decide if FHA is better or mass housing is better, and a lot comes down to this adjusted median income, right? So there's about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, about 17 counties in Massachusetts, and they all have set standards of what the adjusted median income is.
Yep, absolutely.
So, why don't we talk a little bit about that? Because, you're going to want to know if you fit this program, and that's the first thing to look. You could Google it right away and just say income limits in Massachusetts, right? So we could actually bring up the slide. Jonathan, it's actually slide number 4.
All right.
Income limits. And I think, jumping around a little bit, but I think that, once we start talking about income limits, it's good to see, if you fit the bill, if this is something that's going to be for you. So Mike, why don't you talk about how they kind of look at this?
So we look at the income limits. The general mass housing program, you have to be under 135% of the AMI, which you'll see in
What does AMI stand for those of us that are
adjusted
idiots?
medium income?
Thank you.
So basically what it is, For example, where I am in Middlesex County, it's just shy of $140,000. And, it goes all the way out to when you're way out in Western Mass, out in Berkshire County, you're looking at, roughly $90,000. So if your income level is below that and you meet the guidelines, which, guidelines also include credit score, your debt-to-income ratio and such.
And this is household income.
This is household income.
So whatever income is derived from your home, if you have a wife, children, or whatever it is, everyone combined in that household.
Correct.
Okay, so with that said, you see the kind of slide up there. Now we can go back to really the mass housing program with 3% down on a single family or 5% down on a multifamily. So if they fit the income limits and they can have a credit score, what's a credit score requirement?
Credit score on the typical mass housing is 660 to go to, but there's two different credit. So then you have your debt to income ratio. With the 660 credit score, you're restricted on how much you can borrow against what you have for income. So you can only go up to 41% is your max, where if you have a 680 credit score, then you can go all the way up to 50%. So it really is going to depend on what your affordability is based on your credit score.
Right, so debt to income ratio, definitely get with your loan officer, get with MRice, and he can break it down, show you the calculations. Because you want to know, if you can fit into this program, you want to know the differences on price, right? You want to know the difference of what you're going to pay as an FHA mortgage versus what you're going to pay at a mass housing mortgage. Or even a conventional mortgage. You want to see the three different vehicles when you make a decision.
Absolutely. That's, and a loan officer should be presenting you with some different options if they're available for you. Because, one program's not, the best for everybody, and every program, has different benefits. Mass housing has a program where, with this mass housing program, if you're out of work, they'll make your mortgage payments for you for, I believe it's up to 6 months.
Yeah, so job loss protection. That's a huge deal. I read a stat that 72% of people don't buy a home because they're worried about losing their job. So if you're worried about losing your job and you fit in the mass housing, they'll cover you again up to, I believe, 6 months.
Yep.
6 months.
Yeah, it's a great program. They got some great little benefits like that are available that, like an FHA doesn't have. If you, something like that, you'd have to go out and get private insurance if you wanted to do job loss. Under an FHA mortgage, so they don't have some of the same features and benefits. So it's really the loan officer's job to kind of understand, what your needs and wants are, and breaking it down, because sometimes depending on, pricing and, and mortgage insurance and your ratios, you might qualify for one program, not the other, but once you do qualify for the program, it's a matter, or the different programs, it's a matter of breaking it down and saying, why this program is better than that. And it's not always just about the payment.
The other thing, too, is if you're looking at buying a condo, mass housing has huge benefits when it comes to deed-restricted properties. So say, for example, you're buying a condo and it's in a project that has some wording in that master, the kind of the master condo docs.
Yep.
Mass housing will look at it and actually do it, where it's conventional, they will not, right? So it's a Fannie Mae, they will not do it. But
right.
It saved a few deals in the past. And if you're buying a condo with the deed-restricted language, you definitely want to look at mass housing.
Yeah, and many people that are looking to buy condos, with the FHA loan, they're looking at 3.5% down, but the property isn't FHA approved. And it's very difficult to get a property FHA approved these days. It used to not be. We used to be able to do spot approvals, and we can't really do those anymore. So, in a situation like this, it's going to open up the amount of properties that someone could look at, because if they're FHA approved, there's a good chance they'll qualify under mass housing, provided they have the income limits.
Now, I understand this program is called mass housing, so this is just for Massachusetts. Are there programs that are similar to this in other states, or is this unique to Massachusetts?
No, every state has some different programs. New Hampshire has a program where they'll give you a 3% gift, 3% grant, actually. So basically, under that, they're granting you 3% of the purchase price, and then you only have to come up with 0.5% of your own money plus closing costs and such. So New Hampshire does have a great program that's similar. So every state kind of offers different programs along the way.
And MRice also has that program in his repertoire, is New Hampshire Housing.
Oh, great.
Yeah, it's another program. So if you're looking in Massachusetts or New Hampshire, it's similar.
It's very similar,
Right.
very similar. So every state has some sort of a program. Currently I'm licensed in Massachusetts, New Hampshire, Maine, and Rhode Island. So all those states have some different programs. That are
We've got
available to
listeners that listen from all over the place.
Yeah,
so
so New England,
there
right?
should be somebody. There should be if there's a program, how would they be able to find out about those other programs?
Easiest way is to just go on Google and Google, like if you Google Mass Housing Program, or if you Google Connecticut Housing Program, Maine Housing Program, anything like
So
that.
they're not really creative when it comes to naming them.
No.
No.
It's what's New Hampshire's? It's New Hampshire
New
Housing.
Hampshire Housing.
Right.
Yeah, so, if you're interested in learning more about it, too, just give Mike Rice, the mortgage guy, a call, right? Did you have a jingle or anything?
No, just Google me, Mike Rice, the mortgage guy. You'll find all my information right online.
And I got you popped up on the screen there, too, if anyone needs to reach out to you.
Great. So this particular show, we're talking about Mass Housing, and Mass Housing just came out with a new program, and it's called Mass Housing Mortgage 100. So 100 means they give you 100% of the purchase price, meaning that you do not need a down payment. So everyone's like, wow, geez, how do you get into a program that you don't need a down payment? And this is newsworthy. That's why we're having the show. Is this little tweak of what they've done is give you your down payment. So let's talk a little bit about that and how this can work.
So once again, on this program here, we go back to income limits. Everything by this program is once again driven by income limits. So you have to be 100% of the AMI. They have to be under 100% of the AMI. In Middlesex County, as an example, that's only because the county we're currently in. So it's $103,400. So if you make less than that, then you are eligible for a down payment assistance program under Mass Housing's Mortgage 100 program. So what they do is they'll go up to $400,000. So we'll use the number at $400,000. So you'd have one loan at 97% of that, and then the second loan under the down payment assistance program falls. So they'll go up to $12,000. So that's the max they'll do.
Right. So it's 1% of the purchase price or $12,000, whichever is less.
No. It's 3% of the purchase price.
3% of the purchase.
3% of the purchase price. So on $400,000, that's $12,000. So you'd have a first mortgage of $388,000. You'd have a second mortgage of $12,000. That's the max you can go to.
Gotcha.
So we'll use
3%.
under the max situation. Right. So you have the first mortgage.
Yep.
And then you have the second mortgage. The second mortgage is amortized over 15 years, but it's only amortized at 1%.
That's the note I was looking. So it's amortized at 1% on that second
right.
mortgage.
So if you were at the max you had to do, that 100%, that extra 3% that you're borrowing under the program at 1% for 15 years, it's only costing you roughly $72 a month.
So the question is, if it's a $400,000 home, right?
Yep.
And you want to put down 3% normally, that's $12,000.
That's $12,000, exactly.
So the question is would I rather come up with $12,000 right up front, or pay $72 a month with no down payment?
Exactly. And often, people buying houses, I tell people all the time when they're buying houses, don't empty the piggy bank.
Well, yeah, because when you own that home, you're going to have to paint, you're going to have to do landscaping, you're going to have to do
Murphy's Law always kicks in.
Well, that and the 75-inch television that fits perfectly on that wall.
I mean, it's just, you're going to have expenses. So if you can actually utilize that and just pay the $72 a month on that example, I mean, it could be less, right? I mean, Massachusetts, depends what county you're in, right? Where the kind of the median purchase prices are. But I think that's kind of a game changer for Mass Housing.
It is. It's a great program they came out with. I think they just announced it about 2 weeks ago. It's something that they needed a program like this, and I think they took their time and figured out the best way to roll it out. And I think, with the 100% of the AMI, someone making $103,000, can easily qualify. On that program there, I believe once again, it falls by the same credit score as the 660 or the 680, depending on what your debt-to-income ratio is. So, the thing is if you think you're interested in a program like this and you want to see about, because you've been on the fence because you don't have a lot of money saved, it's a great program. give me a shout. Get you pre-approved. We can kind of ballpark a number that you're eligible for, so that you can get out there looking. It's a spring market right now. A lot of people haven't been able to buy because down payment's a big thing, and there's always this misnomer. People think they need to come up with 20% down. You absolutely don't. Now that with this program, we 100% financing. It's a great program.
Well, talking about 100% financing, I mean, there's a few other ways to get into a home with no money down, right? And that's if the property is actually in a rural area, right, and it qualifies under the USDA.
USDA, yep, another great 100% financing.
I know a lot of the areas down in like the Cape Cod area would qualify. Some in the North Shore area, Western Mass, I'm sure some of
yeah,
that
a
also
lot of
qualifies.
Western Mass is under the USDA guideline thing. If you look up USDA eligibility, you can check out. They have a map of the areas that are available. In New Hampshire, most of New Hampshire is USDA.
And there's
Does that mean there's potential for farmland? What is USDA?
it's just rural, right? So, for example, I'll give you an example. Boxford is considered rural, right?
So it's not inner city.
It's not inner city.
The opposite
right?
of inner city.
The opposite.
I got you.
So, I mean, but the thing is, if I'm driving around right now and I'm looking to buy a house in Massachusetts, I'm saying to myself, well, geez, this sounds like a lot of information. I don't want to do this. I'm just going to call you and you figure it out, right?
Oh, absolutely.
So let's go through. I mean, if I'm not the one. Everyone talks about, just put your information in and you get a mortgage. We do have that technology called Fast Track, right?
Yep.
But is it really going to do the research that you need to do? I mean,
No.
that's a typical mortgage where you just know you want to put down a certain amount of money and you want to move on. But, if you want to get specific and talk to a loan officer and really get something customized to you, let's talk about the dynamics. I mean, really, when they call you, you're probably going to get their information, run a credit report, and kind of see where they fit. Like, what goes through your mind when they call you and you kind of see what their availability?
Well, once I have, an application taken, whether they take it online or over the phone, and then, we pull your credit and everything.
Again, this is for a pre-approval, right? So this
Exactly.
They don't have an address. They don't have
No.
an address picked out. This is they're about to go shopping.
They're about to go shopping, so
Okay.
they provide me with all the information. I gather data, we're gathering W-2s and pay stubs because, most of the time we're qualifying people, we're looking for as much money as possible to qualify them for, overtime, everything like that. So under this program, you've got to make sure we stay underneath the guidelines, but we still have to look at that income because it is reported income. So that's why we're gathering W-2s, pay stubs, written verifications of employment. So we want to make sure, it's like any loan, we just have to make sure you fit in the box of the criteria that we need. So once we have that, and then we kind of discuss, okay, what type of, what are you looking for? Are you looking for a single family, multifamily? So all that, then it kind of like just drains it down to a certain area where you're going to, okay, it's going to be FHA or it's going to be mass housing or it's going to be conventional. And that's the job of me to see what the best program to be put into. And oftentimes the program's going to be driven by what type of down payment money you have. And like I said, once again, though, if you're in these income limits, then we could start looking at these other programs. So it's important to get pre-approved. You shouldn't be out there looking at all if you haven't spoken to a loan officer and done it. And everybody, with the day of the internet and everything, you can plug your information into any system, but oftentimes the people are plugging in information that they think is correct, but it's not correct. So, example is you got a self-employed landscaper saying, I make $150,000 a year. He doesn't make $150,000 a year. He's probably making about $50,000 by the time he takes all his write-offs.
That's expenses, yep.
So, the expenses.
That's why you need to see the tax returns.
That's why we want to see the tax returns.
And also mass housing, I mean, they ask for 3 years tax returns because they want to prove that you haven't owned a home within the last 3 years.
Right?
Exactly.
So that's what the mass housing program is.
And
exactly.
there's some, based on some of these requirements, they'll actually waive that in some of the, they call it the ACE area, which is Boston, Cambridge, Chelsea, Everett, Fall River, Lawrence, Lynn, North Adams, and Somerville.
Right.
That's just new information I learned today.
Yep. No, they got some real, they're lending in certain areas and they're willing to make adjustments in certain areas because they're looking to build their portfolio in that area. They're looking to lend money into those areas.
But I think it's safe to say that it's, doing your mortgage yourself is not always the best way to do it. There's a lot of good information you can learn about things, but you want to be able to talk to a loan officer so you can kind of structure it the way, is it mass housing? Is it FHA? Oh, you know what? The property that you're looking at in that area is USDA eligible.
Exactly.
Stuff like that. If you're a veteran, it's another 100% program, right?
Great program.
We also have a portfolio product that it's a 70-30, which means on good credit score borrowers, you can have a 70% first and a 30% second.
Yep, that's an excellent program.
Excellent program. And these are things that, if you want to save your money and not have to come up with the down payment, it's available.
Yeah, it's available. There's so many programs available, and for me, my job is to go and figure out what you're looking for and find the program. We have all these programs, and there's the ones, the go-tos all the time, but then every once in a while there'll be something out of the box.
Yep.
And it's my job to find how do you fit in that box of a different type of a loan that meets your criteria.
So, Mike, what about if because it's a seller's market out there, right? A lot of times they go with the stronger offer, 20% down, this and that. But, going with this program, do they offer something about rehab money? Like, for example, say they find a house and it needs work. A lot of times those properties won't qualify under the conventional or FHA way of getting financed.
Yeah.
I believe Mass Housing has a program that this 100% is also eligible with rehab money.
Yeah, absolutely. Yep. There is a component to it that allows rehab. You have to have a licensed contractor, as most of the rehab programs out there, whether it be, just a typical rehab loan or an FHA 203K loan or a 203K streamline loan. The work has to be done by a licensed contractor.
You should have your work done by a licensed contractor anyways.
Like your brother downstairs, right?
Well, my brother, he is a licensed contractor, and I'm not saying it to get him a shameless plug, but you see too many horror stories, and on our network we have the Don't Do It Yourself podcast, and they're constantly telling these horror stories about
No Nonsense Nancy.
No, exactly, and Tom Troy.
Tom Troy.
They come in, the contractors come in, and they end up cleaning up the mess from the last guy who skipped with his deposit and just left them a disaster. So licensed contractors are where it's at.
But this is a huge tip, right? Because typically if you go in to a very sought-after home and there's 20 people that put an offer in, it's just, it's a seller's market, blah, 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 right? Are they going to take someone with no money down versus someone putting 20, 30, 40% down? Probably not, right? But if you can see the homes that are available out there today that need a little bit of work and you're willing to do some of this.
Absolutely.
I mean,
little sweat equity.
You might get a better deal, first of all.
Absolutely.
Second of all, your offer is not in the midst of all these people that want that home.
Yep.
And you kind of have an edge. So definitely think of Mass Housing. Definitely think of MRice when you're getting all your information together, because it's a really sought-after program. And a lot of loan officers just don't realize it, or they don't understand it, or simplicity.
Absolutely.
You got to understand. What's your goal?
Right.
Is it your down payment to be eliminated? Is it your lowest monthly payment? What is the goal of the? A lot of times they reverse engineer and say, I don't want to spend more than $1,700 a month, and then you kind of reverse engineer that, right?
That's the best way to do it. It always goes to most people when they get pre-approved, they're shocked at the amount they get pre-approved at, and I don't know if I've told this story on this before, but I had years ago I went down to, before I was in the business, my wife Karen and I were buying a house, and we went and met with Cappy, the loan officer down at the local bank, and we met him on a Saturday morning and gave him all the paperwork and everything. He's okay, I'll reach out to you Monday. Monday he reaches out to me and, oh, by the way, you're approved for, I don't know, it was $500,000 or something.
Wow. And that was before you were in the mortgage business?
Yeah. And
I don't know if I would have gone back in the mortgage
business. And I
basically,
and I was like, what's the payment on that? And he told me the payment. And I was like, oh, that's great. I can eat ramen noodles the rest of my life. I said, here's the deal, Cappy. I said, if you ever tell my wife how much we're approved for, I will never do business with you. Just because I'm approved for that doesn't mean I want to spend that. So, the folks out there, especially the first-time home buyers, you're looking at this stuff, have a number in your head that you're comfortable with paying, and then I can back into that number. Don't
overextend yourself.
Don't overextend yourself.
Well, because that's the number that you can physically pay. That based on the raw numbers, you can physically pay. But again, you're going to be eating ramen noodles. You're not going to have a cable bill at that point.
Exactly.
You will have none of the luxuries of life. You'll just have this massive house.
Exactly.
And think of it this way too: is you're paying rent right now. How's your living situation now? Paying that rent, right? So a lot of times you can get a home with the same type of.
Well, especially now down in Massachusetts, in the Boston area, the rents are just going through the roof, and that's what we're finding. We're finding a lot of people that have been renting finally saying, you know what, it's time to own, because I can buy with no money down or little money down, and it's the same as my rent. So, what am I gaining? I'm gaining equity as I make every payment.
Well, and that's the huge portion is at the end of making your mortgage payments, when you're done paying this thing off, you own something. You rent for 30 years. At the end, you're still renting.
Well, I'll give you a perfect example. We had someone in the office not too long ago, and they said, well, look, I pay $2,200 in rent now, and you're saying it's going to cost me, $2,100 in buying a home. But why do I want to do that? I don't want to move. Well, because it's tax deductible. I mean, that's the part that people don't realize. Your rent is not tax deductible.
Right. Yeah, it's not tax deductible. You're getting a tax deduction. You're building equity. In most people's situations, you're building equity so that 20 years from now, when you have a kid that needs to go to college, you can borrow against it so you can put them through college.
That's
and then
one way.
Start the
That's
process
one way.
all over again. But you're building. It's a piggy bank essentially. You're creating a piggy bank for yourself. A forced piggy bank where, after renting for 30 years, what do you have? You have nothing but a stack of checks.
Well, some smart people out there will say, well, I have my 529 plan for that. I've been reading about that stuff, right? So hopefully they can put some stuff aside on the college education, right?
Yeah.
But I mean, that's the biggest drive, right? So that person was like, oh, I didn't realize that, right? And with the new tax law, right, there's standardized deductions and there's people itemizing deductions. A little bit of change there, right?
Absolutely a little bit of change. And to tell you the truth, I don't know enough about it yet because a lot hasn't come out.
Right.
I
And
mean, it's out there, but it's not
it's
exactly.
how they're deciphering it.
Exactly.
I just went to a seminar.
And how it's
on that.
interpreted.
Right. So I do think that a lot of the people aren't going to standardize deduction. They're not going to itemize deductions like they once have, so they can kind of see what the deduction is going to be. But
Exactly.
it's still available. It is still tax deductible. It's just it's just how you take it at the end.
Exactly.
Of the day. And there's caps and all that kind of stuff.
Right.
So, Mr. Jonathan, I know you're in the double wide space still.
Well, yeah, when he said
the
72-inch TV, I'm like, I don't think that'll fit on the back wall of my double wide. I don't think I have 72 inches of space.
Well, you're a minimalist. You probably don't want to watch TV.
I don't watch much TV. I don't.
That's just a guess.
I'm constantly reading up on how to make podcasts better, sound better, look better.
But I kind of envision that like the old lamp, like just kind of, saving electricity.
Exactly. Sometimes using candles.
Candles, right?
It's not easy to read with candles.
All right, so that's mass housing in a nutshell, right? And we talked about it with Mike Rice, the mortgage guy. If you have any opportunities to purchase a home and you're looking, give him a shout, 781-241-1254. And like we always like to say, on Easy Money New England, there's no such thing
as easy money.
You got it.
It's a new day, it's a new way. Call 877-NewFed1. It's a new way.
Hi folks, it's Brian Damico, owner of NewFed Mortgage, and I'm really excited to introduce Fast Track Mortgage, our new online system that gets you approved in less than 15 minutes. Whether it's a refinance or a new purchase, just go to newfed.com anytime, day or night, and click on the Fast Track Mortgage button. Fill out the form, and within 15 minutes, we'll approve your loan at the lowest rate possible. Don't waste time dealing with big banks. We're local and here to help you close your loan fast. Just go to newfed.com 24/7 and get approved in less than 15 minutes. Fast Track from NewFed Mortgage. Now that's a new way to get the loan you need fast.
877-NewFed1.
Subject to credit approval, equal housing lender, NMLS number 1881. Call us to the website for details.
877-NewFed1.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Cafe, the United Podcast Network, its partners, or affiliates.
All right, we're actually back because Brian didn't realize that he had one more question to ask Mike Rice.
I wouldn't say it. Well, I'm not on. You on? I don't hand myself.
All right,
Am I heading on now?
We are
You
back
have to do a
on.
little splicing on this one.
This is just tagged right on to the end of the video.
No, you got to splice it. That's not professional. Mr. Jonathan will splice this. But, there was one more question before Mr. Jonathan kind of brought us into the thing, into the closing music. But, one of the things we'd like to add is, first-time homebuyer, you have to have a first-time homebuyer program as well, right?
Exactly. You have to take, there's a mass housing officer class. They do it both. You can go there. They have, classes that you can go to, physical classes, and then you also have online classes.
And there's a list that you can provide.
Absolutely.
All the different classes. And
If you go to mass housing.
And if it's a multifamily, they'll also have to do like the landlord component.
Exactly. Yep. There's some different components, but the class isn't that bad. A lot of the information is great information. Oftentimes, the information I'm providing you is pretty much the same, but they just require you to go through the class so you understand everything you're getting yourself into.
So the idea is when they give you their information, you take the application, and you say, hey, it looks like you fit mass housing. Here's the link. Why don't you go get your mass housing certificate? So now when that time comes, you already have your certificate.
Absolutely. You don't have to have the certificate to put an offer in, but in order for us to close a loan, you have to have the certificate. So if we know you're going to be in a mass housing loan, I generally say, go online, take the class so that we have the certificate.
Good information. Good information. Again, if you're looking for a home in Massachusetts, mass housing is definitely the thing. Again, also New Hampshire. New Hampshire Housing has a specific program out there, and utilize this for any questions that you have. If you have any questions, reach out. MRice at NewFed.com or info at NewFed.com, and we'll get right back to you. Thank you very much.